Hello traders, it is Friday, July 12th, and we are in the middle of the trading day. We've got about an hour and a half into trading right now, and it's time for our weekly video. Before I get started, I would like to thank all of you who have donated to my niece Ashley and my nephew Ryan. We lost my sister-in-law Brenda in the last week to pancreatic cancer, and they lost their father, my brother-in-law, 8 years ago to melanoma cancer. So both of these fantastic young adults are left parentless. So we're trying to help them put all the pieces together. And I had asked that if you made some money on my last trading video, that you would consider donating to the GoFundMe page. If you query "Cancer Took Both Parents, please help Ashley and Ryan," you'll be able to find the page. If you haven't donated so far and you made money on these trades, please do so. They really need your help. That's the last time I'll mention it. And again, thank you so much for your generosity. So this is going to be a free video. I'm going to highlight some stocks that I like, and everything that I do this week will be available on www.oneoption.com, in particular the Option Stalker subscription. And we're going to be focusing on swing trading and using end of day analysis. So you can use the end of day charts, all the searches will run, and you'll be able to go through and do exactly what I'm doing. For those of you who are day traders or very frequent traders, you do need to have real-time quotes through Interactive Brokers or through Tradier to be able to get live data into the Option Stalker platform, which is what I'm going to be using. And I'm also going to be showing you a indicator that I use for day trading the S&P 500. It is fantastic. So without further ado, let's go and take a look at how we did last week. And I'm going to click on lists, and I'm going to select July 3rd. And I had mentioned to all of you that the market had broken out, and we had this nice little breakout here. We wanted to retain that breakout, and as long as we were above it, we were in go-go mode to buy these stocks. And so I'm going to click through them. You can see BAH, very nice, moving higher with the market. You should be moving your stops up. I like to use the low of the prior day or the open of the prior day as my stop. So you just start trailing these stops higher. Now, I haven't talked much about the market, so let me backtrack for just a second. Let's bring up the SPY and see what's going on here. We've had a breakout to the new high. You can see how every day the close is very close to the open, and it forms these dojis. So stair stepping higher, but intraday the action hasn't been very robust. The volume's been fairly light, and the market's simply grinding higher on momentum. We have this breakout here, and the Fed will probably lower rates in 2 weeks. And we've had Fed speak this week by Chairman Powell. We also had the FOMC minutes. So they are very dovish. No one seems to care the reasoning behind the rate cut. And the reasoning is that global economic conditions are worsening. Trade concerns still loom. I do not feel that we are going to have a trade deal with China before the 2020 elections. And right now the talks are basically happening via phone conference. China just said overnight that we have not committed formally to increasing our grain purchases from the US. So everything is very, very tenuous. We have the debt ceiling looming. We're going to hit it probably within the next 3 weeks, right around the time that Congress starts to go into recess. Nothing gets done. There'll probably be some mudslinging. They'll wait to the very, very last second, and then they'll put a band-aid on it to extend the debt ceiling until the budget negotiations in October. So that's the way things are playing out right now. The news cycle is fairly light. We've got some big news coming out of China Monday. a lot of economic numbers. I think we muddle around for about 2-3 weeks. Earnings season, the beginning of that cycle tends to be bullish. We kick it off on Monday. So a grind higher tenuously. But these gains right here, they can easily be stripped away by one negative day. So don't get lured in if you're a swing trader into thinking that this is go-go mode, we're breaking out to a new high, everything is fantastic, buy, buy, buy. Don't do that. This is a time to be very, very cautious. And I stated that in my last video. For those of you who like to trade momentum and you feel compelled to be in the market, I gave you some excellent picks. We started off with BAH. MCO has moved higher, but you can see, McDonald's, you can see how it spiked and then it pulled back the entire day yesterday, even though the market finished strong. When you see movement like this, it's time to get out and take profits. On this spike higher, we were looking to buy a pullback. I'd mentioned I don't like buying big spikes like this, especially not in a stock like McDonald's that does not move much. So you would have been buying in here on this pullback. I wanted to see a retracement halfway through this green bar. So you'd have been long in here. If you see a move like that, you stop out of it. You still would have been able to make money on McDonald's. But you have to be very, very cautious. MSI looks good, still grinding higher. Long tails under the body. So keep moving your stops up. I would keep moving this stop up, and my stop would be somewhere right here on the open of this inverted hammer. As long as we're moving higher, it's okay. Procter & Gamble, grind, grind, grind. So use these opens here as your stop. You do not want to close below it. So another profitable trade. SBGI, nice. So we had the breakout here. This is July 3rd when the video came out. Okay, you can see. And I had mentioned we want to pull halfway back in this green bar. I don't want to rush things. I don't want to get over anxious. So in here's your entry point. We have a stop on the breakout down in here, still in the trade. You can see very nice winner. Now I'm going to get to the last one. That was a big move. That was a $23 rally in CI. This was a stock that I had highlighted, but I'm going to be honest with you, if you stayed true to your stops, you would have been out right in here when the stock failed to hold that breakout right here. That was our key. But I know I've heard from many people, they stayed in the trade and they were using a looser stop and this horizontal support level here, which is okay. And they've made some really nice gains. If you've been in any of these trades, please consider donating to that GoFundMe page. They've all fared well, so let's see if we can find some other picks this week. Now, the market's tenuously grinding higher, and my temptation is to stay on the bullish side to find stocks for you, but we're pretty overextended on the bullish side, so I'm going to be inclined to maybe find a few bearish picks, and we'll outline a bearish scenario when you can get short. Let's go back to the SPY because everything starts with the market. Market first, market first, market first. If we look at the close here, we've got 298.80 was that close right there. That is a level that we want to hold. So let's call it 299. So we do not take any bearish trades unless the SPY closes below 299. So that's the first caveat to doing any bearish trades. As far as bullish trades, you can stick with the ones that I've shown you currently, and I'm going to show you how to find some other good bullish trades using the custom search engine. So let's go in, let's take a look. I'm going to show you one of my favorite bullish searches. It's Pop Bull. We're just going to click through a few stocks, see what pops up. It's nice, big breakout, overextended there for the day. This is a really nice rally here. It gets into this gap. It's likely to fill that. So this symbol is CPRI. I like that right there, and you use that opening price of 36.04 as your stop. So you're in at 36.54. You use a tight stop there, and you have a target to get back and fill in that gap. So there's a nice bullish trade for you. I'm going to write that symbol down, CPRI. And I'm not going to highlight a bunch of bullish trades. In fact, I'm going to say these are more for day traders, guys that are looking for very short-term momentum. This is nice. Got a horizontal compression and a nice little breakout. You can use that as your stop. Not going to highlight it. Just looking for something really good. ROST. This is a nice stock. You can see if you're a swing trader, all you need is the pop bull search end of day, and you're going to be hitting stock after stock after stock like this. You've got a little bit of an inverted head and shoulders here. Shoulder 1, head, shoulder 2. Now you're getting a horizontal breakout here. That stock looks like it wants to go. Just going to keep going through. GM, nice breakout here. Nice move higher, good little breakout. And we'll end with Intel. Looks pretty good. Gartner research firm came out and said that PC sales increased 1.5% in the second quarter. That's good, provided that the prior two quarters we've seen decreasing PC sales, so semiconductors are moving higher. Intel looks like it has a chance to go up. So I'm going to put on the 200-day and 100-day SMAs. You can see how the stock is above the 200-day. If you decide to take a long in Intel, you use that 200-day moving average as your stop. So this is Pop Bull. I'm going to go over to Pop Bear, and I'm going to show you what we've got in Pop Bear. Again, we're looking at some bearish trades, but we're only looking if the SPY conforms and closes below 299. So this would be a horizontal support level. If the stock breaks below it, that would be a failed breakout. There's your breakout. There's your follow through. Now you would have a failed breakout. Anyone that bought here is going to be looking to sell here if the stock cracks below it, and that provides us with follow through selling. I'm sorry, I didn't even see the last bar down here. Here's where the stock is right now. This train has left the station. We're not interested down here. Stock looks very weak though. This is a nice breakdown. We've got the 200-day moving average right here. Very choppy stock, so I would not be interested in that. Probably will bounce off the 200-day moving average and require a bit more work before it can get through that. This is a nice strong trend lower. Got a horizontal breakout here. We're below a longer term horizontal level. Not bad. Cheap stock. We're going to keep moving on. This is a nice breakdown also. Good weakness. Not the one I'm looking for. Here we've got a breakdown below the 200-day moving average. We want to see a breakdown below this horizontal support level right here. I'm going to drop an alert for myself, and that's around the 1330 level. Let's see where that close was. Looks like 1358 was that close. So we want to see the stock close below 1358 before considering a short there. Nice compression, drop below horizontal support. This is probably a good short as well. J&J news came out just recently. We got a pop-up alert in the platform on it, and that breakdown below the 200-day moving average is very negative. NVO also big drop here. Okay, there's a short that I like. NVS. We've got a breakout here. I'm going to put the alert line in here. There's your breakout to a new high. Comes down and tests that support level, tests that breakout, tries to rally off of it. Today we are through it. Anyone who bought here is getting flushed out here. Stock has plenty of downside before it gets to the 100-day moving average. NVS is a good short. So we're going to mark that as our short of the week. And I've given you a long to take a look at. Take a look at BGS. And as you're watching the video, go through these symbols. There were probably 4 or 5 stocks that presented nice shorting opportunities. Very simple for swing traders. All I did was I went in and I looked at Pop Bear and I looked at Pop Bull, flipped through those charts. There were a ton of good Pop Bull candidates, but I'm not real confident in the market. So I think that from a long standpoint, if you stick with SBGI and a couple of others that we had in the list, we're going to stick with those. I don't see a real need to add. So let me take a look. MSI was a nice long. That looks good. Procter & Gamble continues to grind higher. That looks good. SBGI also looks good. Probably the strongest out of the group. So SBGI, CPRI are our 2 longs. NVS is a good short. I'm going to go in. I'm going to create a search and I'm going to label it July 12th. And then we're going to go in and SBGI and CPRI are the 2 shorts that we like, and NVS is a short that we like if the SPY closes below 299. Save and close. That'll be what we look at next week. Now I'm going to shift gears a little bit. We are getting close to earnings season, and I'm going to show you how to use custom search to find really good stocks before earnings announcements. And I'm going to click on option liquidity. I'm going to put in a very high value, and I'll tell you why in a minute. This means that the stock has extremely good liquidity. I am going to click on pre-earnings or projected earnings date, and I'm going to go out. Earnings starts next Monday, but I'm not going to go to the 15th. I'm going to be giving myself a little bit more time, and I'm going to go out to the 22nd, and then I'm going to click on we'll go to the 26th. So we'll look at what's coming out that particular week, and we're going to click pre-earnings bull. Now I've already done the statistical research on pre-earnings bull. These stocks have rallied 2 weeks ahead of their earnings announcements more than 75% over the last 12 quarters. So I took the last 12 quarters, I looked for stocks that consistently were rallying 2 weeks ahead of earnings announcements and into that earnings announcement, and then we've matched that with stocks that are projected to announce within this week. And I've made the option liquidity very, very high. And the reason that I did that is because we're going to have quite a few candidates. I don't want to give away everything in this video presentation. Trust me, there are a ton of stocks that will fit this criteria, and you click through them over 15 minutes and you are going to see some fantastic put credit spread opportunities. What I like to do, some people like to buy these stocks into earnings. Some people like to buy calls into the earnings announcement. I like to sell out of the money put credit spreads because the stock should have upward impetus, and if it stays flat or moves higher, I'll make money by selling out of the money bullish put spreads. And guess what's on the list? You know, I'm going to add this to our bullish list, Intel. And I'm going to add it because I would say that selling a bullish put spread below this 200-day moving average is going to be a good trade. And if the stock closes below that 200-day moving average, then you need to buy that put spread back. But that looks like a very nice trade. It'll probably hit a little bit of resistance up here at the 50-40 level. So Intel, Starbucks, Twitter. Let's take a look at each. Go, 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 go. I would not be selling a put spread on this, and I wouldn't buy calls on it because the stock has so much momentum that there could be a pullback at any time. If we see market weakness, it'll probably pull back. Twitter, I don't see a lot that interests me, but if I could put that put spread on, let's say the stock retraces here with a little bit of weakness, and if I could get the stock down to about the $36 level, then we might have a shot to sell the 35.5 puts, buy the 35 puts, and do that bullish put spread here. So I don't see a trade setting up right here because it needs to get down right in here to get the premium I want for that 35.50 bullish put spread. And the reason that I want to sell that bullish put spread at this strike price is because that 100-day moving average is support. Every trader's looking at it. Every trader expects the stock to bounce off of that level. Bounced here, bounced here, bounced here, bounced here. That's a support level. If that support level is breached at 35.50, well, then we need to buy our bullish put spread in. We were wrong. Chances of that happening are pretty slim. We've got the stock moving higher. We've got earnings coming up. Stock tends to rally into earnings, but hopefully we get a little bit of a market pullback in here, and that'll allow us to get that bullish put spread done. So I'm not going to put Twitter in the list because it's not a candidate right here and right now, but I think that one sets up nicely for this strategy. The point is, when you run this custom search, you keep looking 2 weeks out, 2 weeks out, 2 weeks out, see what's coming up, look for good option liquidity. You could use a rating of 3 and you'll be able to get your spreads off, no problem. 13 is a very, very high value, and these are some of the most liquid options available. Put your earnings date range in and then select pre-earnings bull. Very easy. Now once earnings have actually happened, oh my gosh, the platform is fantastic. I'm going to just click post earnings and see what came out overnight. Only had one stock overnight, but during earnings season, you'll be able to go in, and one search that I like to use is post earnings. So when I click post earnings, this search looks for stocks that have announced yesterday after the close or today before the open. So these stocks, this is the first opportunity that they've had to trade since the earnings announcement. And I'm talking normal markets. Obviously, there are after markets trades that take place and pre-market trades that take place. A lot of that oftentimes is noise. I'm talking about this is the first time during normal hours that the stock has been able to trade. And then I like to put in stock is greater than prior day high as another filter. So I'm looking for stocks with great strength. After that earnings announcement, they've been able to blow through the high from the prior day, and there's a good chance that they want to move higher. I also like using stock below prior day low to look for weakness. You can combine a number of other search criteria in here as well. So that's how we trade. Now that's another earnings feature that we have in custom search. If I wanted to look for pre-earnings, now we're here on Friday, so we're not going to get a whole lot of stocks coming up, but you can see these companies are going to announce Monday. Citigroup is kicking off earnings Monday, and you can see it's the second symbol here. I'm going to click this off, and I'll show you one more earnings feature. Oftentimes, the initial earnings reaction is very muted. You look at the number, you think, gosh, it was such a good number. I wonder why the stock didn't take off. And it takes a few days for the stock to actually gain its footing. And then when you look at it 2, 3, 4 days later, you go, oh my gosh, I knew that stock was going to take off. I wish I'd have been on top of it. Well, here's a way for you to go back and look at those earnings stocks. We click earnings date previous, and I'm just going to go back and we'll be able to look at some stocks that have announced. I don't believe there were very many announcements this week, but we'll use July 8th to July 12th, and we'll just mark option liquidity, and we'll go to maybe a minus, we'll go as low as possible. This just means that there were options on the stock. You can see there were actually quite a few companies that announced earnings. And now we can go back and we can click through. I'm going to leave this. Actually, I'm going to pull this search off to the side. It'll be easier because it'll continue to hide behind this window. So there might be a good example. You come in, you say, hey, this stock did really well. It got through these major moving averages. It moved higher. And this is one that I'd be interested in if it gets down to this price right here, that opening. I'd be interested. So you put your alert. Very, very easy. And you're looking to buy there. Here's an example where you go back, stock spiked, pulled back. Now you've got weakness. If you had looked at this the next day, you could have caught that and said, hey, you know what? This is a failed breakout. We should see some additional selling here. I'm just going to click through a couple of other symbols and we'll see what we come up with. There you had a big reversal yesterday above the 200-day moving average. Big rally today. So you start catching this on the open, ride it higher. That's how we use the post earnings search. So you just go back in and put the date. I usually like to stay within a week, 2 weeks at max, because I'm really not looking beyond 2 weeks. It's who just recently announced a few days ago, and what has that reaction been? It takes a day for the market to digest that news, and by the second or third day, I start to get a very clear picture for direction. And I know that you've had stocks before where you look at it, it posts a gangbuster number, and the stock actually pulls back and you're left scratching your head. But then you look at it 2, 3 days later and you go, there it goes. And now I've missed the move. This is a way for you to catch those moves. That's how we use the custom search engine for earnings. And earnings season is coming up. We're going to be trading earnings like mad in the chat room. I'll show you one other feature, and it is pre-earnings options. So this is across the top tab here. You click it, and during earnings season, this is going to be filled with stocks in here. And you can look across the top column. The expected percent move is calculated, and we do that based on option pricing. The average move, so we've gone back historically and looked at what the average move is. Percentage of times exceeded, there you can see a third of the time it exceeds that expected move. And then you take a look at the recent volatility. You've got put-call ratios. You have group performance. This is a great way. I don't personally trade earnings announcements. I don't hold positions overnight into earnings announcements. I know a lot of traders like to do it. Personally, I feel it's a crapshoot. But if you're one of those who loves to trade earnings announcements overnight, this is an invaluable tool because you'll be able to visually scan through. Here's the expected move, here's the average move, here's the percent times exceeded. You can go in and you can find stocks that typically exceed those expectations, and then you can either buy calls, buy puts, buy strangles, buy straddles, whatever your strategy might be. Or for those of you who are premium sellers, you might like these. Percentage of times exceeded, 0. Well, in that instance, you're probably going to be selling out of the money strangles. Lots of resources within Option Stalker. So I'm going to show you one other feature, especially for more active traders, and we're going to go into an SPY chart, going to take off all of the moving averages, and everything is toggle on and toggle off, by the way. We're going to go into the 5-minute chart, and I'm going to overlay the one option indicator, and I'm going to show you how well it works. If you day trade the S&P 500, this is all you need. Yesterday, market opens. See this cross right here? Crosses from negative to positive. This is where you want to be buying the futures. It didn't show you here or here like most indicators. It's saying we need to be ready to go long right here. Right here. Right here. Nice upside. Get a bearish cross right here. This indicator took me 10 years to develop. So this is not just some kind of moving average, or I can't even tell you the variables that go into this. But it is predictive. It is not reactive. And I would challenge you to find predictive indicators that are anywhere near this good. And this is what we do in the chat room. So here we get a cross. You can see how the indicator is telling us right here, there's danger ahead. Okay, so the market continues to trade. Oh, we get a little bit of a pullback. Now we get a compression in here. For conservative traders, you may want to buy short a breakdown of this compression right in here. You can see it's still telling us the market is going to move lower. You capture this move. Now you get a couple of long tails under the body. To me, that tells me that there's support. Sell off, boom. Sell off, boom. Sell off, boom. Buyers right in here. What's the indicator telling us? Hey, we need to be ready for a low in here, okay? The market is starting to finally bottom. You get one more push lower and you get a nice green bar, green bar. Okay, this is a good entry point. This is pointing higher. There you go. Nice rally. You get a compression in here. You're not really doing much in here, but you get a nice cross right here, boom, into the close. Oh, gee, Pete, that was just a lucky day. I bet it doesn't do that very often. Well, here's today. Got a bullish reading on the open here, and then you get a cross right in here. Saying, okay, be careful. We're not in rally mode. You get a gradual drift lower in here. Get your cross right in here. Get a little mini cross right in here. Well, there's not really anything telling me it's ready to take off. You get a nice reversal bar here. A little more time spent, then that's where you actually get your cross right in there. So the market hasn't done much today, but you can see that the indicator is predictive. It's not reactive. And this is a very tight trading range for us. It's Friday. We're in the middle of summer. It's a very light news cycle. So this is more of a scalper's market than anything. And in my daily comments, I had mentioned to traders that when we have these doji formations like this, we can expect the dojis to continue, and that's your opening price. Anytime you deviate from that opening price, there's probably going to be a pretty good fade setting up. So here we get our pullback. The farther we get from that opening price, the better, because we're likely to go back to it. And then there's our rally. Okay, we're starting to get a little bit far from that opening price. My guess is that we're going to close right around that opening price today. So you fade the extremes. You use that as a magnet, knowing that the market wants to go back to this price. That's one of the many day trading patterns that we look for, and that's how we use the one option indicator. When the market is moving and we've got nice movement in either direction, this indicator is fantastic. And you can even use it on a 1 minute basis if you're a scalper for the S&P 500. It's a great indicator. So again, I'm going to recap very quickly our picks. CPRI, going to put those major moving averages up again. Toggle on, toggle off, put the 200-day, put the 100-day up. You can put the 50-day up as well. You can see the stock is trying to get through this 50-day and also that horizontal resistance. It gets through that level. We will use that 50-day as the stop out. Very easy trade to manage, very small risk, nice upside reward. That's what we look for. NVS was our short. We've got this breakdown through horizontal support. We're using $90 as our stop on a closing basis, and you can have a target at the 50-day moving average, or you can use the 100-day moving average. If the SPY closes below 299, we will be taking a short position in this, but it has to close below SPY 299. We do not want to be shorting the market when it's in go rally mode into earnings season. We get a couple negative earnings announcements, the flavor could change very, very quickly. So this is a nice short that sets up. It's the only short that I've got in there. SBGI grinding higher, grind, grind, grind. I like that long. Here's a mini breakout. We use that open as our stop. That opening price is 57.46. As it keeps grinding higher, keep using as those lows of the prior day or those opens of the prior day if you get a big green bar as your stop out points. You're just trailing it higher, knowing that you're going to hit resistance somewhere around this $63 level. Intel, we like that as a bullish put spread. We're going to sell below that 200-day moving average. That's your stop. If the stock closes below the 200-day moving average, you need to stop out. If you're a stock trader, you could buy this with a target right around that 100-day moving average. As I mentioned, the Gardner report, PC sales were pretty good, so that should keep the stock moving higher. That's this week's video, giving you some nice picks, giving you a short to consider. If you're an active trader, you should subscribe to Option Stalker for the 1OP indicator, and by all means, for all of the different earnings searches that are available to you. This is where the action is. Even if the market's not moving dramatically, individual stocks will move on those earnings announcements. And there are fantastic intraday plays and some fantastic swing trades as well. For those of you that have donated to my nephew and niece's GoFundMe page, thank you very much. God bless you. I will see you next week, and we will have some more picks for you.